they do. In addition, so combination of both the levels that we give out plus the price action opportunities create the setups that we have to be able to trade the market and try to make a little bit of money every day here, scalping the market for about 2 to 3 points on our trades. And depending on how many contracts you trade and how well your entry points are, you can obviously take a little bit more than 2 points on these trades. Again, everything is dependent on each individual's risk tolerance, and again, everybody trades differently. No two people trade the same. I think I've said that enough to make you understand that each individual here has their own ideas of risk and how they handle it and how they trade around it. So we take that into consideration. So we have our trading room here for those of you who are just new, and we kind of talk about the trades today, and sometimes it happens more often than others. Sometimes it's very, very slow. But yesterday we had a lot of opportunities during the day. The market was moving around a little bit after 9 o'clock. It created some volatility and gave us opportunity to scalp the market both on the short side and the long side. So when people, I don't get how people come in here and say, "Oh, so are you long or short?" I mean, or did you, you have to. The market is moving around. You have to trade both sides of it. At least that's what we're trying to do. Obviously, sometimes better than others, but that's all dependent on volatility. So, but what we have done here is given us a guide to the day, and these levels are a guide to the day, and price action opportunities. If the market starts moving around, we'll get those. And a combination of both give us opportunity to trade, and sometimes we'll obviously make money on those opportunities, and sometimes because the market is the market, and we have to get stopped out. It's just the nature of the beast. All right, so if you were a little aggressive there and you saw our green band, maybe you took advantage of that. Again, not everybody likes that trade, but just like we have our blue banders, we have our green banders. And some of those some of you guys do like the green band as well. We have no economic reports out today, but we do have a 20-year note auction at noon Chicago time, which could affect financials and maybe affect us. Again, we've been focused in on the bond market a little bit more recently because of concerns about rising rates, even though the bond market has come back pretty good. We're now hanging out at a 158 handle. And the yield on the 10-year is at around 156.7, somewhere in that range. It was closer to 175 not too long ago. So it's come back here a little bit, but it was also at 125 prior to that. So it had a big move. Obviously, when you're talking about 50 basis points, and when you started at actually it was even less than 1%, but let's say 1.25, and you go 50 basis points, you're moving about 75%. That's a pretty big move, right, for interest rates, percentage-wise. It's just like a stock. When the stock goes from $1 to $2, it's 100%, advance. So we're at these low rates. So when you get a big move like that, everybody gets a little nervous, and that's what happened. But it has calmed down a little bit, and so does what we're looking at as far as interest rates are concerned. At least that talk has dwindled a little. Again, we trade equity futures, many S&Ps, so that's what we are looking at and trading. It gives us good opportunity to trade because the volatility is there, the movement is there, the ebbs and flows are there. Obviously, when we get opportunity, right, we need to get opportunity to have those ebbs and flows. And opportunity comes from volatility, and we are definitely at the mercy of volatility, as you could probably guess, as we drifted down here to our pivot here area. Again, when we give you a level or anything like that, it's an area, right? You have to We're not going to be perfect. If I give you 118 and it goes down to 119 or anything like that, doesn't mean it's wrong. It just means that it just didn't get down to 18. So it's an area that we're trading, and that's something that you should. Oh, nice little trade there for us. If you did jump in there at 8, even gave you the 18 that time. Nice little rotation here off of the rotation back to their pivot. Oh, wow. This was a really nice one. I'm back here. I would probably look to get out of here against their green band, but you never know. That was a surprise. That's a surprise little trade there for us if you did jump in there. All right. We've had that a couple times this week. It doesn't always work so easily, but lately it has been a very nice trade, that rotation back to our pivot, at least the first time to it. It was a very nice, very riskless trade there for you if you did participate. But those are the opportunities that that's a price action opportunity, right? I mean, there's plenty of them. There's plenty of them that occur during the course of a day. The opportunity here is to recognize those opportunities, for us to show you what they are, and then for you to take advantage of them. Now, not everybody's going to take advantage of every price action opportunity because they can't recognize it or visualize it, and that's fine. You have to find and recognize the trades that each individual trader is looking for and try to capitalize on it. And so some will use that trade, others will use another trade, but we show you a whole bunch of them. And anything that I'm saying or talking about is done in our education course, part of our what we offer here. In addition to this room, so we have two separate entities here: the trading and then the education part. Chad, speaking of education? Chad, are you in the room? Did you get my note yesterday that I left you? It was in the chat box. Okay, good. So today, is that a good day to do our class? You going to be around? Okay, fantastic. All right, so hello there, Anil. So if we can repeat the levels again for us in the chat box area, for those of you who might have stepped in a little bit late, there they are. And so I said that we have two parts to this room. We have the trading room, plus we're also going to have an education course that we offer. And the education course is done in this venue using live charts to explain the concepts and ideas that we trade with. And we are going to have that today, later on this afternoon at 12 o'clock Chicago time. And we like to use live charts because it helps us explain some of the concepts and ideas visually with what's happening today. And we think that's important to use live charts. I don't put the levels, draw the levels on the chart because, like I said earlier, we adjust them. And sometimes if I put the levels on the chart, people think that they are the end all. And that's not how we work here. I don't like a lot of lines. It confuses people. It confuses me. Besides that, I'm colorblind, so I would have to put different colored lines up there so I know what the hell's happening, and then I'd confuse myself. So that's not it's not advisable for me to put some lines up there to show you where our levels are. The plan is to trade what the market gives us. And that's what the plan is. Right now, got a little resistance up here at 25. We had a little buying opportunity if you were early on at 18 that we made a nice rotation off of. The 25 is going to be a little bit risky here. So, maybe take the upper end of the range here just because of the way the price action is. So I'm giving you that. So plan. So yeah, the plan is to trade what the market gives you. That's the plan every day. Sometimes it gives us a lot, sometimes it gives us a little. We don't have any preconceived notion as to what we are going to trade, because the market is not giving us any opportunity. Well, we had nothing open. No, we did have a buy at 18 originally, and we scalped it for. You could have easily got 3 points on it without even blinking an eye, and without even taking any risk. So we were long a little while ago, just very little while ago, since we opened up only 10 minutes ago. Anyway, but we are taking advantage of ebbs and flows of the market. We're not trying to hold it for 10 points, something like that. That's not what we do here. 20 points, 50 points. Sometimes we don't even get that. I mean, obviously, when the markets are moving around, that's a different story. Like last year, when the markets were crazy, we had 10-point stops and 10-point profit targets, and we were getting them. You know, it's just the nature of the beast. Right now, the beast is not is very contained. So there's not the opportunities are different than they were, and we can only take what the market gives us. You know, so right now the market is kind of dawdling a little bit in a range, and we had a quick little opportunity, like I said, early, and now we're just kind of pivoting back and forth here, not going anywhere. All right, let's see what we could talk about. All right, again, resistance up here at the 25 area. Again, just because of the price action, a little careful around there. Maybe take the upper end of the range there if you're risk averse. Growth worries surrounded Netflix followed its earnings report after Tuesday's close, sending the stock down nearly 9% in after-hours trading. The streamer only added 4 million paid net subscribers in the first quarter. 4 million added, short of its guidance of 6 million, and the consensus forecast is 6.29 million. Despite the headlines, Netflix is turning into cash cow, reporting net income of 1.71 billion, and is even returning some of its cash to investors via its first stock buyback plan in nearly a decade. Buy the dips. Well, we were going to buy. Well, if you were going to buy the dip, you had to buy the 18 a couple times already. But now I wouldn't buy it the third time down there. My next support level would be down at the 12 area. I don't know if we're going to get down to 18 or even back down to 12, but 18 is a little bit suspect because of the way the market traded already. The bigger picture, Netflix has missed its own subscriber forecast before, and the company has repeatedly warned of a slowdown following the pandemic-fueled expansion, but investors were looking for something else. The company projected net adds of $1 million for the second quarter, meaning it would end the first half of the year with 6 million subscribers short of where Wall Street projected it would be by that time. So I guess, the only reason we're talking about them is because it boomed during the pandemic, and people are staying home and watching. I still watch Netflix now. Actually, I'm like hooked onto it. I like all those. You can watch everything all at one time. You don't have to deal with commercials. You don't have to wait till next week. It's pretty much done for you. All right, we're coming up here to the 25 area. Again, we talked about, lower end of the range there, probably not a reason to get in because of the way the market was trading. So maybe you took the upper end of the range. So we're a little short here against the 25 area. Again, where is how is dependent on how you trade as a trader. Everybody trades a little bit differently. We all understand that. And so we just are here. I'm here to explain risk and then have you adjust your trading to the risk, to your risk tolerance. So it's very important to understand that, right? All right. So Netflix is there. Again, we're trying to work on the upper end of the range here, maybe the 25, maybe 25 and a half. We'll say that 6.5 is the uh, settlement price. And if you happen to stay long from the dip down to the 18, nice trade. Again, that's possible. Everybody, again, I keep saying everybody, whose risk tolerance is a little different, so everybody trades a little different than one another. That's just the nature of what's going on here. As we come up here to the upper end and see what it wants to do now. Again, the settlement price here is 6.5, and now we want to really see what we want to do if it comes up here and test this as well. Again, just keep your stop in no matter what, because like I said, we don't know when markets are going to extend or not. All we can do is trade what the market gives us. Sometimes it's easier, sometimes it's not. And sometimes you have to work a trade, sometimes you don't. All these things come into play here as a trader. Okay, if you've taken your stop or come close to it, then that's fine. Then we'll look at the next opportunity. If it continues to go up, we got 32 as the next level of resistance. Market continues to uptick here. 32, next level of resistance that we have. All right, coming up here to the 32 area. Nice rotation there off of that. This is where we have some resistance. Again, we sold at 26. Again, we adjusted, even our adjustment didn't matter. And now we're coming up here to the 32 area. Nice rotation by the market here. Again, just keep your stop in there because we never know when this is going to happen. And that's why we have our stops in there so we don't get run over on any of these trades. I mean, make it worse than it is, right? So that's what we keep our stops in there for. Uh, 2 to 3 point stops, that's what we're looking at. The 27, 28 area, that's what your stop is on that. And then now we're coming up here to the 32. Again, whatever the situation is, and make sure you keep your stop in place. We are not going to love any trade. It's not what we do here. We have to respect what the market is doing. And right now, it's a little bit of a buying opportunity for whoever. But that's fine, as long as we accept it and just keep your stop in place. Yeah, the market is kind of testing this 32 area here. Could we repeat the levels in the chat box area if you got a chance? There they are for us. All right, the market is kind of up here now. Again, keep your stop in there no matter what the situation is. That way we kind of minimize whatever trade we've got going here that doesn't work our way. And then we'll look for the next opportunity. That's all we can do. Here to the 34 area, the market continues to uptick. And just to make sure you use your stop. All right, so we've kind of got run over here on our upper levels, 25 and a 32. Tried to minimize the 25 there a little bit because of the way the market was trading. And again, there was also an opportunity there to you could have, if you wanted to, not even get into that trade because of the fact that we told you it was a little tenuous because of the way the double top happened there at 23 and change or 22 and change. Not our best trade here. We don't like one-way trade, right? We like ebbs and flows, and then we definitely don't like one-way trade. That also gets us in trouble. So one-way trade gets us in trouble, and this is what we got right here. We need ebbs and flows to be able to be somewhat, taking advantage of those when they do occur. And when we don't get those, it kind of makes it tougher for us. As our next level of resistance up here is the 37 area. Market keeping its strength here. Well, it's all right. You can ask any questions. I mean, we had our levels there of resistance that we got stopped out on. So, we are. I just told you what I'm doing. I told you I'm entering the trade. I got stopped out. I mean, how do you? this is what I'm doing. I told you we bought the 18 area. I mean, I've told you that. So what can I tell you? Well, one more. I mean, I told you exactly what's going on. I told you we got stopped out. Told you we got in at 18. Okay. I mean, I can only be like so forward with you. I mean, I'm telling you exactly what's happening here. Yes, we did sell 25 and I got stopped out. I also sold 32s and I got stopped out. What? Not really a good trade. But hey, this is what happens. We have to take the good with the bad. This is what this trading's all about. And we have to accept it as part of the day. Sometimes, again, it's a little bit easier than others. Sometimes it's you got to work. And today is one of those days where we might have to work a little. But that's okay. Next level of resistance we have is up here at the 37 area. Again, this type of market doesn't do us much good. We like ebbs and flows. That's correct. We like ebbs and flows, and when we don't get that, it obviously becomes a little bit tougher to trade when it becomes one-way trade. And that's where we're at right now. All right, market is kind of up here. They're going to come up here and test this 37 area, maybe. Don't know if they will or won't. Okay, coming up here to the 37 area. Again, the one-way trade here. Maybe the market is kind of accepting things that maybe Netflix wasn't so bad. Again, the market reacts to things differently all the time. So we're coming up here to the 37 area now. And again, if it's a little bit too strong for you and you want to just wait and watch for a bit, I get it, especially if you've had a couple losers in a row. That's what usually would happen here. As strength in the market seems to be pushing the market forward. Just keep your stop in there no matter what, unfortunately. Not our best. I mean, you also see the strength that's in the market. So sometimes if you just wait and let it play itself out, that's probably a good thing to do too, until it calms down a little bit. As you can see, the strength just keeps continuing. The only place we could have gotten long was maybe down at the 24 area there. And market is up here now, 42, well, again, 30, yeah, 39 and a half up here. Again, nothing wrong with waiting for the market to kind of settle down if you don't want to hit those other levels until it calms down a little bit. It's also another choice. And we talked about if you get two losers in a row, maybe we should wait for the other level to, I mean, we should wait for until market calms down a little bit and we have maybe a better opportunity. Bonds, look at that. Bonds kind of reacting to S&P's rally. Bonds have been doing that lately. I mean, the last 2 days kind of inverse trading a little bit, even though they're at a 158 handle. So uh, they've been doing a good job of, well, kind of holding this 158 handle now. All right, we just come up here. We kind of ran through, no, yesterday's break was not, it was a lot longer. Well, we were at, opened up a little higher. Kind of broke all day. I guess we've come up here, found a little area around the 139 to hang out on. All right, turning over here a little bit. So right now, support would be around the 132 area. Well, we are turning over here a little against state 37. I mean, obviously, if you got stopped out, you got stopped out. Not all of us did. Nope. All right. Wall Street notched its first back-to-back decline since March, Tuesday, as a number of factors disrupted the bullish mood seen last week. The declines came during the last forecast to be a bumper earnings season, but the sky-high valuations, the lack of catalyst to improve upon lofty expectations, may prove to be a stumbling block. With stocks, it is often better to travel than to arrive. That's funny. That's true, by the way. That's very funny. Other concerns are weighing on the market as well, but this but in this investing atmosphere, those could go away as soon as they come. Dow and S&P futures are down a little. As you can see, that was done early this morning. Oh, that's good. HT. That's better than over here. COVID-19 coronavirus cases are soaring across the globe with a new variant pummeling India and with a devastating second wave. That had reopening plays lead the market lower as the State Department said it would increase do not travel advisories to 80% of the world's countries. Some health experts also suggested that herd immunity may be off the table and are rather talking about control. That's not good. Inflation pricing pressures already been seen in markets last week, with the biggest monthly rise in consumer price index since 2012. Consumer giants have seen come out and said that they will raise prices because of higher commodity and input costs. So that's another factor that's contributing to the market. Well, I mean, it's not a matter of keeping Americans from leaving the country. I mean, do you actually want to go? I mean, do you really want to go to those places that are sky high with those numbers? Well, you should, as long as you could, and as long as it's right now, safe is the word, right? I mean, everybody says stay safe. That's very important. This will pass eventually, right? I mean, all of the stuff will pass eventually. Just needs patience. The rate on the 10-year yield crept up another 2 basis points to 158 and even touched 160 on Monday. Traders will keep an eye on the auction today of $24 billion of 20-year notes we talked about. That's coming out at 12 o'clock Chicago time as a gauge of demand for long-term government debt. Also, another 35 billion will be held in 119-day bills. So there's a lot of auctions going on behind the scenes. Again, all of those would depend on enthusiasm of wanting to buy them and the bid to cover ratio in most of these auctions that come out. All right, the market is kind of hanging up here, maybe flagging a little bit, looking for the next leg up. Support, I said, would be right around the 32 area. Tough little trade for us this morning. We don't like markets when they decide to do their one-way trade. And unfortunately, we got that one-way trade this morning. Not our best market to trade, obviously. We are looking for ebbs and flows of the market, and sometimes we have to accept that we're not always going to get those. Most of the time we will, and that's what we have to deal with are these moments when we get this type of trade. We have to consider it and make sure. That's why we keep our stops in place so that we don't get run over in these type of situations. It's very important, and this is a classic example of why we are trading with cautious amount of opportunity and trade, and just making sure we stay focused and keeping your stops in there. Not every trade works out our way, obviously, and we have to accept that and take our losses when they occur, and that's why we keep our stops in place. Yes, obviously we were looking for about 2 to 3 point stops against our entry points. So that would obviously your stops would be based on levels. I mean, we would like it when we get a position and you have a scale and you're trying to have a trailing stop, then you can base your stop on the price action and what the market is telling us. But the first initial entry point would be initially set based on the entry point. So simple, if we have 2 point stops and you sold to 32, so your stop would be at 34, and etc. And and that's how we would trade. I mean, at these levels right here, especially when you're pushing to these new highs areas like they have, or making an extension of the range, that's all you can do. All right, so we're just kind of hanging here now. Probably looking for the next leg up, which would be up at around 42. Again, if it's moving too much and you just want to kind of hang a little bit and watch until the market slows down, I would do that. The CV19, there we go. Unfortunately, you're right there, silver. And yeah, keep working at it. Can't let it beat us. Maybe it's winning the battle right now, but hopefully at some point, we'll be able to get ahead of it. It is scary that this virus situation it's not doesn't seem to want to just get away, but it is what it is. I mean, what are we doing? We have to live in this situation right now, and we have to get through it. Not that easy, that's for sure. All right. We'll see how it affects the markets, though. I mean, that's the only thing we care about. I mean, that's about the only thing we can do here is to care about how and when all this stuff affects us, and what opportunities we're going to have to trade it. That's all. Our trade just it always seems to work out better when the markets seem to go down. Seems to have some good ebbs and flows to the market. And unfortunately, when the market goes up, it just seems to have this one-way trade. And it is what it is, So nothing's changed in that area, but we just have to accept it and move on. Hey, I'm agreeing with you there. I'm agreeing with you there, Silver. It's nothing to sneeze about. We have to be cautious and be careful still. And hopefully at some point we'll be able to at least, like you say, scratch the surface and try to control it a little. All right, well, Paul, you do have that choice. I mean, everybody's got different opinions on this. Some people take it a little bit more, cautiously than others. Some people are more worried about it. I don't know what the answer is. I can see both sides of it. And unfortunately, I've had a couple people that have passed from it, and so I'm a lot more. I take it a little bit more seriously because it hit home a little bit too close, and I I've went out. I've went out with a friend this weekend who doesn't believe in this at all. I mean, he just thinks the whole thing should never have been this way, and that should never have closed down, and that I don't want to say he thinks it's a hoax, but you know, I just don't know what to say to him. You can't argue with that because there's no you can't say anything to him. Well, I mean, pneumonia is part of the one of the reasons you get. That's one of the symptoms, right? That's one of the symptoms of the it attacks your lungs, and so if you know how bad that was, add that to not being able to breathe and everything else. So look, it is what it is. It's you can't say that it's not out there because it's out there. All right, that's good. So my idea of can we reprint the levels again? So my idea of the pivot is that the market should ebb and flow or churn around it. Well, not really. Excuse me. My idea of the pivot is that get a little bit. That's where the market's going to turn. Like at least since we're staying above it, trying to buy and find the opportunities to buy it is good. But we're also looking for those areas where we feel that the market might bounce off of, which is our resistance areas. But as long as we can try to find an opportunity to buy the market, because we're above our pivot, it's the pivot also becomes a level once we trade away from it so much. It's not so much it's going to churn around there. I don't know if it's going to churn around there. I mean, I have no idea. Sometimes it does, sometimes it doesn't. So today, obviously, we've traded away from it. So, it's hard to define what it's supposed to be all the time. That's not, we're not trying to define what the pivot is. It's just an area where we feel that the market it's an important area where we feel that if it trades off of it one way or the other, that we should maybe go with it. But then it always seems to come back to it sometimes, not all the time. And so we have to respect that. So again, it's just an area where the market's going to hopefully maybe turn from or turn away from, maybe come back to. I don't know. That's all dependent on the activity of the day as we come up here to 42 area. And again, if you not want to trade it, that's fine. I can give you some levels here above 42. We got 50. And then above that, 55, 61, 67, and 74. As the market continues to stay strong here. Could you have bought it anywhere? We're looking to buy it around the 32 area. Obviously, we never got down there. And so, anywhere else, there's the additional levels that we just gave out. Not that they're meaning much right now, but hey, what can I tell you? It is what it is today. Again, like I said, you don't have to sell these levels. I mean, they're not, obviously today is kind of having its own unique kind of situational day, and so we just get out. That's all I'm going to say. No reason to keep trading if the market just keeps moving like this. And we just can be patient and wait. Nothing wrong with not trading. Give you an idea of what I'm doing right now. And I'm not happy. Trust me, I'm not happy about not trading, but I don't like to get beat up all day long either. So we'll just wait till things calm down a little bit until I figure out what is happening or why it's happening. Euphoria came back into the market all of a sudden. What can I tell you? Do I understand it all the time? Absolutely not. Do I wish I understood it all the time? Yeah, but I don't. Do I would I did I know that it was going to rally? From the opening, I would have told you just buy it. Yes, there's more buyers than sellers. It's about the only concept that is fitting right now for this moment in time for me to tell you. That's really not a good explanation. Hey, that's true though, right? All right, there's Chad. We'll see you later on this afternoon. All right, we're just kind of hanging up here now. Again, we're looking. Again, the market is just staying strong for the time being. See what it wants to do. We can be patient with it also. Next level of resistance we have is up at 50. We're kind of drifting around here. Support would still, well, right now, still be around 32. Good support would be around 32. Getting a little bit of a break here. Again, good resistance. The support would be around the 32. All right, we just kind of just bouncing around here a little bit. $32, good support. I don't know if we're going to get down there or not, but we can just be patient and wait. Dale, do you miss being on the floor? Yes, obviously you do miss being on the floor trade. If you're a floor trader, if you used to be a floor trader, you definitely do miss being on the floor. And uh, the idea here on trading electronically is definitely different. You do get a better feel for it, for the market. Obviously, the algorithms that come into play when you're trading electronically are different than the feel on the floor when the market starts going one way. But that's why you have to, when you're trading electronically, I think more than you did on the floor, is pick your spots and make sure that you keep your stops in place. It's the only thing that could save you here when you get the one way trade like we got this morning. So to be able to, save your bullets for the next opportunity, you have to make sure you keep your stops in there, because you just never know when the market is going to have an influx of trade one way like it did this morning. Usually, we get ebbs and flows, but we haven't been able to. Maybe we've gotten into the wrong place, but it's going to happen. We're not going to be perfect all the time, and the market sometimes kind of does its own thing. It's got its own brain sometimes, and we never know when that's going to happen. And so we have to be prepared for it by make sure we have our stops in place. And but yeah, as far as the floor is concerned, absolutely. If you give me a choice, obviously, since I was on the floor for so long and maybe kind of survived that opportunity when I was trading on it. Yeah, I mean, absolutely missed the floor. There's no doubt about it. And I don't even know if it's going to ever come back. I mean, I doubt that it's ever even going to come back. I mean, I would think it might. It might. I mean, even though I don't know if the bond market will come back. I mean, maybe the big S&P pit will come back. And obviously the options pits are there that will come back.
Hey, a couple of quick programming notes. Want to welcome those that are coming back into our service from guests from the last couple days. I'd also like to welcome the ones that are coming in today. Welcome aboard. Again, if you have any questions, don't hesitate to ask them. If you missed this morning's levels, just ask for repeat in chat. They are posted in the chat area, but if you just came in, I don't think you would see them. So make sure you ask for that. This service is a daily opportunity for traders that are looking to trade better based on their own trading. For those that have been coming in, raise your hand and I'll send you out the friends and family offer that Sol is working. This service is usually $379 a month. Right now it's on for $100. If you get the $100, you get to keep it. Hey, Anupam, welcome. Good morning. Hey, Anthony M., welcome. Hey, Birger, Carlo, Casey, Dale C. Hey, Mark, appreciate it. So, Mark L just posted the pivot today, which was 41.18. Support was 12.07, 01, 40.95, and 87. Resistance at 25, 32, 37, 42, 50, 55, 61, 67, and 74. Hey, Stephen M., did you sign up for Sol's monthly? Silver? Paula S. Hey, Paula, I think you did the other day. Just let me know back in chat. Nicholas H., let me know. Carl with a K. Joe B. Francis W. FT. Dale C. And Anthony M. So I'm going to send it out to everybody right now. It's being sent out in the chat area. And if you have any questions, don't hesitate to post them. If you have been coming in, you haven't switched over to Sol's Friends and Family offer, the bot might take you out, the AI. If that happens, I'll give you a telephone number. I can try to get you back in. But I think you should take the time and just do it now. It's 312-685-2582. That's 312-685-2582. Thanks.
All right, we are just kind of hanging up here. Support again be around the 32 area, and otherwise, if you want a little aggressive, maybe around the 35. To go to reference. Well, I mean, we use the 5 minute to give us a price action and then confirm it with the 60, and then probably look at some other ones for the longer term opportunities. But yeah, I would probably say the 5 minute price action, but it'd be if it we can confirm it with the hourly, it becomes a stronger trade. We seem to be a little range bound up here between like 40 and 43. Let's see if we can't try to, maybe it's flagging here a little bit. Support would be around 34 area. All right, now we do continue here. Again, we're trying to find your entry points to get along there because it's kind of flagging. Again, aggressive players, maybe you got in there at around the 39 area. Again, everybody's got different risk tolerances, and I was just giving you the safer entry point. Obviously, 32 initially, then 30, the 35 to 36 area. Obviously, if you were a little aggressive, there's a reason you could have bottomed there against the 39 area. Now we continue the uptick here. It's one of those trades that seem to be keeping its strength today and continue to pop up. So we're trying to find areas where you can enter and get long. Next level resistance we have is up at 50. Again, just understand, keep your stops in there. We're not going to love any of these trades today, like I said earlier. Could you found a place to get long? I was giving you areas to get long. Again, it all depends on how aggressive you want it to be as an individual trader.
Hey, I just sent out Sal's discount link for his friends and family. I sent it out to Dale C. Hey, Dale. FT. I sent it to you. Jim M. I sent it to you. Joe B. I sent it out to you. Carl with a K. Carl with a K and a last name with a K. If I missed anybody, let me know. Paula, I think you signed up for it. Silver, I think you're on the list to sign up. And Paul, let me know. I think you had signed up the other day. Just let me know back in chat. Use the chat feature to respond. We start here at 9 a.m. Eastern Time. We go through the morning session together. Usually done right around this time based on the trades and bank and money. So if you have missed out on any of that, let us know. Saul has this Zoom trade along that's offered on a daily basis. And he also has his class and his mentoring work, which once you become a friends and family, you can certainly friends and family and join us in the Zoom trade along on a daily basis, and then have the opportunity to talk about Saul's course and his mentoring work. So anyway, so I sent it out to everybody. Take a moment, take care of it. If you get pitched out by the bot or the AI, give us a ring on this number, and I'll try to get you back in. I'd rather have you do this than get thrown into Zoom prison, but here's the number, 312-685-2582. That's 312-685-2582. Hey, quick shout out to Dale C. Hey, Dale, you back? Let me know in chat. Dale C. Jim M, let me know if you're back. Jim M. Carl K, let me know if you're back. Carl K. Paula S, let me know if you're back. Paula S. Hey, Renee. Is it Renee?